Hello and welcome. Let's now go across to a very special guest. Madhu Kela, market veteran, is now joining us. Sir, thank you so much for taking out time for us. Sir, in the Indian markets, in the month of Jan, we have seen an underperformance versus global peers. What is your reading of Jan 2023 so far?
I think the India story is not based on 3 months performance of stock markets. It is much beyond that. And you need to understand that, last year, because of fall of Russia and because of Chinese markets going down significantly, the weightage of India arithmetically went up a lot. And it was like an overweighted stock in everyone's portfolio. Hence, people had to trim down to balance the portfolio, and that is why you saw selling from foreign investors. And because Chinese markets had become so cheap, because of their underperformance and because of their fall in their weightage, emerging market weightage of China, right? So now, obviously, when the markets do well, people will run to ensure that they have an adequate weightage. And that is what is happening, that money is going from India to China because of this weightage rebalancing which is happening. So I don't read too much into this, that because this 2-month outflow there is any real big damage to India's story. However, I would like to communicate to your viewers that India's story is well in path. I think is a structural story over the next 5-10 years, and situations and corrections like this are the ones which gives you an opportunity to enter good companies at good prices.
So, the latest word in the market has been what's happening with Adani Group, how things are moving in over there. You always look at numbers, you always look at what's happening in. What are the hard facts about the numbers of the group as a whole? When you look at the numbers, recent acquisitions that they make, how do you look at the group?
This is a great question. I think people's opinion have no value. Only facts have value. So let's look at the facts. So as per my understanding, Adani Group has spent 1.55 lakh crores in acquisitions in the last 3 to 4 years, including the Ambuja Cement acquisition which they have done. Their total debt reported today by their own sources is roughly 1.85 lakh crores. So in another way, you can say that all the debt, majority of the debt which has come for acquisitions, right? And now, again, it is not my opinion. It is a fact that these acquisitions were not very expensive, as there were many bidders in all cases for these assets, including the Ambuja Cement acquisition which happened. The second fact is, so I do not think that an infrastructure company, if it takes debt for acquiring assets which are long-term in nature, it can be called that it is over-leveraged. The other point, again, go by the facts. Adani Group has 23,000 crore rupees of reported EBITDA. I am not again going on projection. Reported EBITDA in the first half, right? And as they have disclosed and as the analysts are estimating, that on a normal year it should be double of this, so roughly it should be 50,000 crores EBITDA for this year, right? And it can grow because lots of assets are in pipeline, and so over the next 3 years it could grow by 70-80% from this base. Now it is up to you and the investors to see a group which has the potential to make 80,000 crore EBITDA, and if it has got 1.8, 1.9 lakh crore rupees of borrowing, whether it is an over leverage.
So, a lot of banks, PSU banks specifically, have also seen a fall on the basis of, Adani Group concern. You have liked this sector across last couple of years. What do you make of it? Are you bullish after the recent correction still on PSU banking names?
By no, and obviously State Bank of India itself has come and clarified it, and I do not think PSU banks as a whole, there is any need to worry whatsoever, because all of these assets are infrastructure assets. The funding, whatever has happened, whether it is to Adani Group or to any other group, I do not think there is any reason to worry, because these are asset-based transactions. These are cash flow based transactions, right? So none of it is not. None of them have lent money against shares. So they need to be worried about the volatility in the stock prices. And as we have seen, a lot of these assets have got executed, are in the process of getting executed. And you have seen, what kind of coverage ratios individual banks have reached to, even on the PSU fraternity. And I think, after the credit cycle which they have gone through in the last 10 years, between 2014 and 2022-23, any PSU banker will be in a mood to take any extraordinary risk when it comes to lending. So I think I've been broadly positive for last 1.5 years, and I reaffirm my instance that PSU banks are excellent investing opportunity in this fall. Again, with disclaimer that you need to verify your own facts before acting on my advice.
All right, sir. Thank you so much for taking out time for us. Always good to get perspective from you. On that note, completely out of time.